Hello and welcome to my channel, Easy Investing Income. The purpose of this channel is to show that you can make pretty good monthly income selling options, primarily selling covered calls and then cash secured puts. The goal of this channel is to show people you can augment your income, and you don't need to actually take a lot of risk. You're able to do it with keeping the risk to a minimum. I want to, before I get started, and talk about how I did in my third month, which was November of 2020. I'd like to mention to everyone this is an opinion channel. I'm by no means an expert. I'm not a financial professional. This is just a hobby for me, a way for me to make extra money during these crazy times. And I also wanted to mention the rules that I've been working with. So in the past, when I used to sell or work with stock options, I didn't really have a plan. I just kind of did things haphazardly. So with this channel, I've decided to put a plan together. And this month, I really didn't make any changes from the previous month. But what I'm looking at doing is primarily selling options, primarily two types of options: covered calls and cash secured puts. I do also do what's called vertical spreads, and I can talk more about that later when I actually get into the trades. But what I'm looking at primarily is if I do a covered call or a cash secured put, I'm trying to do it at 10% outside the money. So if a stock is worth 50, doing a covered call for 55. If it's a put and say the stock is around 50, I'm looking at doing a put of around $45. And then I'm also looking at delta, which is one of the Greeks that you use with selling stock options, and trying primarily to keep the trades where they're not high risk. I'm looking at probabilities of about 80%. I want to have a chance that the options contract will expire, and I want that to be about an 80% chance. So I'm also closing contracts if I obtain good premium. I don't really have a hard and fast rule for that, other than if it gets to just a few dollars and I feel like there's a chance that maybe it could come back to being in the money, then I will actually close that position. I primarily look at dividend investments. I'm a dividend investor, so most of the stocks that I do own or ETFs are dividend based. So I'm going to primarily stick to those. I will trade in a little riskier securities from time to time, like I've done some Microsoft and some Apple. And then I've done an ETF, ARKK, which is a little bit more volatile than some of the old time value dividend companies. But being a dividend investor, I'm pretty much, most of my income is coming from dividends, and then also by selling these option contracts. And then, at this point, let me switch over and show the spreadsheet and go over the trades that I had. So, and I'll go into a little more detail on each trade and what I did. This month I had fewer trades. So let me go ahead and switch to the screen. Here are the 14 trades that I did in November. The first one was Bristol Myers Squibb, BMY, and it was a cash secured put. And it was a delta of 0.185, so a little bit over an 80% chance. And I was able to get 47 cents of premium for that. So not bad, not as much as I usually like to get. Next, you'll notice I did a covered call on SO, which is Southern Company. And for that, I got 37 cents, and I did pretty low beta, or delta, not beta. a 0.17, so over 83% probability that it would expire out of the money. Both of those I closed. One I closed late November and the other one in December. If I move the spreadsheet over, you see the BMY I closed for 5 cents and the Southern Company for 2 cents. So overall, I had a $40 a premium and $33.70 a premium for those first two trades that I did on November 5th. Then the third trade, I did a vertical call spread. That's pretty much where you sell. And in this case, I did I believe it's a call. It's not a put. So I sold one call at 115, and then I bought another call farther out in the money. So in a way, I was able to use less margin in order to do that. For that, I actually got 89 cents a premium, and at the time, or at the end of November, it was still open. So, and then I did KO. It's a covered call. It's farther out. I did one for quite a ways out, 120.23. It's called a leap, I believe, if it's farther out. And I did that primarily to get a little bit more premium. You'll notice I got $1.24 premium. You'll notice I do that with Coke. I'm willing to hold on to the shares and sell these calls that are a little bit farther out. I'm a little bit more willing to lower my basis or the amount of shares I have in Coca-Cola. So I'm willing to take some of these longer term contracts. So the next is Corning GLW, and I did actually two trades and 3 different contracts. The first one I did at 38. So I did a 38 call. So meaning I was willing to sell the shares that I had in Corning for $38, and I did. They expire on 12/11, so it was about a little bit over a month, or a little bit over 30 days, and I got 53 cents per contract, which netted me, $94 for the contract, which is pretty good. The other one I did it slightly higher at $39 call, and for that one, the delta was 0.188, so 80% chance it would expire out of the money. And it did actually expire, and I got 31 cents for it. So not a whole lot of premium, but still, for doing 3 trades that probably took me, or 2 trades that probably took me 30 minutes on November 9th, to be able to make over, I think between the two, I made about $124, which isn't bad for maybe 30 minutes of work. The next one is Verizon. Again, it's a covered call expiring on December 24th, and I did it with a little bit of a higher delta of 0.28, so close to a 70% chance it would expire out of the money. For that, I actually did 2 different contracts, or I did 2 contracts, and with a premium of 60, and the end result was $1.13 in premium, so that worked out pretty well. Then I did another Coke, and again I did it pretty far out, 120.23, and it's $70. So the way I treat a lot of the covered calls is, especially for Coca-Cola, because I do have a lot of shares. I inherited some Coke stock many years ago from my grandfather, so I've got a really low basis in it. So looking out into the future, I'm willing to take $70 at this point in about 2 years, so it's Coke at $70, and I think at the time I did this it was close to $40, so it would be a huge increase in a matter of about 2 years, a little over 2 years. Then the next trade was Sysco, and this is the food Sysco company, SYY, and I actually did 2 different contracts, both expiring on the same day, but one for 60 and one for 65. These are both puts, and 2 different deltas. So I didn't really want to. I might have done it at different times of the day. Actually, when I think back, I got enough premium on the first one. I felt like, well, let me do another one because that's good premium. I probably, in hindsight, should have done just one trade with 2 contracts. When I first did it, and that's something I'm kind of learning. If you get a lot of premium, it probably makes sense to do multiple contracts. At this point, I don't do a whole lot of multiple contracts. I'm still kind of learning. So for both those, the first one I got $85 worth of premium, and then the other one I got $89 worth of premium. Again, actually, the second Sysco is November 18th. So those were 2 different days, but they do expire on the same day. And they're 2 different, one is for $60 for the strike price and the other one's for $65. You'll notice over on the trade description. Next, I did ExxonMobil, which is XOM. I did it on the 19th of November to expire on December 24th at a $33 put, or a strike price of $33, and the delta was 0.178, so about an 83% chance that it's going to expire out of the money. And I got 46 cents or $46 worth of premium, which netted me about. Well, I also ended up closing it and buying the contract back for $3 or 3 cents. Again, you'll notice that I put things as cents, but you always multiply by 100. So I was able to buy back that contract at about $3 or close the contract. So the net was $41.70, which isn't bad. Next is ARKK, which is it's an ETF that it's probably one of my riskiest or most volatile investments, but it's an ETF and it's got companies in it that will kind of most likely change the way we live down the road. Tesla's in it. Some companies that are working on things that could really change the way we live, meaning it's very volatile. Just having Tesla as one of its primary holdings means it moves quite a bit. So I did a call 115 expiring on 115.21 at 0.2992, which is pretty high delta for me typically. So this is close to a 70% chance of expiring in the money, but I did get some really good premium, $2.50. Again, if you multiply by 100, it's $250. And at this point, it's still open, but that's my biggest take for this month. So with the more volatile investments, you can actually make a little bit more money, but you're running the risk that it's going to be a sign or you might take a big loss on it. So that's primarily why I stick mostly to dividend value-based companies. And then ED, I can't remember what that ticker symbol's for right now. Keep thinking Edison. But I got, I did a contract covered call for 115.21 for $85. And I got $52 or 52 cents times $152 in premium. It did expire, so I ended up with $51.35 when you take into effect the cost, which is with Schwab it's 65 cents per trade, which back in the old days it used to be a lot more. So the fact that what they charge or the costs have come down so much for trading that it makes doing something like this really worthwhile. And let's see, next I did another vertical call spread, and this was Microsoft. What I did with it is it would expire on 1/15/21, and I did it at 235 is the strike price that I sold the contract, and then I bought another contract at 260. So 260 was the farther out side of the vertical spread. So one way you can think of it is you can subtract 235 from 260, which is 25, and it would require 25,000 in my account to be able to do this transaction. But because Microsoft is a little bit more volatile than most of the other investments, like I mentioned earlier, it's one of the more risky investments that I will do. And I believe I'm going to create a video on just doing vertical call spread. So I know it can be a little confusing. So keep an eye out for a video on how I've done that, especially using Schwab. But let's see, I got premium of $1.48, so a fair amount for that trade. And I only did one contract. Now with these vertical spreads, it's really two contracts. So instead of it being 65-cent cost, it's actually $1.30. But again, doing two contracts for that small amount is pretty amazing. And it expired, and so I ended up with 146.70, which again is 148 minus 65 cents each for the two trades, which comes to 146.70. So for the whole month, I did 1315.75. So I didn't do as well as one of the months. I think the first month I only did around 1,100, and then in October I had a really good month and did 1,800, and this month I did 1315. Now this month did get a little bit crazy for me because of Thanksgiving and we went on vacation. So I didn't trade as much. You can see I only had 14 trades with 16 contracts, and most of those days I only did 2 or 3 trades for each of those days. So I didn't really spend a whole lot of time, and I think I didn't do any trading on I think 1 week when we were out of town. I didn't do any trading. So, and the average trade premium, so if you average these out, was $94. Again, I'd like to try to get closer to 100, and I think going forward I'm going to try to see if I can do fewer trades but at higher prices. So yeah, I did 8 covered call trades and I did 4 puts. So I did a little bit more covered calls this month than last month. Things I learned. I'm finding that I'm trading a lot of the same stocks each month. I do have a journal. The spreadsheet you're seeing here comes from my journal. And a lot of times I'm just redoing some of the exact same contract from the previous month. I did 2 vertical call spreads this month. Again, Microsoft and what was the other one? I think it was ARKK. Yeah, ARKK. These trades require less margin than a naked call. So in a sense, when I say a naked call, if I did a put on ARKK for 115, I would need $11,500 in my account. So by doing the vertical spread, I only needed, let's see, for the ARKK, I did 115 and 130. So I only needed, what is that, 1,500? Yeah, 1,500 in the account. You multiply the difference. So you subtract 115 from 130, which is 15, and then you multiply that by 100. So I only needed 1,500 in the account to do that. So, it allows me to do a little bit more trade without using all my margin. For the case of Microsoft, the margin was $23.53. Yeah, the other part of the margin, you also have to deduct what your premium is. So if you're going to get $100 in premium, so you subtract the 2 strike prices, and then you also subtract the premium that you're making. So for the Microsoft, you can see if I had done that just as just as a naked call, I would have to come up with 23,500, or it'd be required to have 23,500 in my account. You will notice that I closed one of the GLW, or the Corning, and I primarily did that. You'll see here, one closed, one expired. So I didn't want to run the risk. They were really close to being in the money, so I didn't want to run the risk of having both assigned. So to give you a for instance, with say the actual value of the stock was 38.50, well, then the 38, both of those would be assigned. The person would probably run the contract, and they would take ownership of the shares, and the shares would be pulled out of my account. So I didn't want to run the risk of losing, more 200 shares of Corning. So I went ahead and I closed one of them. Let's see, what did I pay for that? 5 cents or $5. So it wasn't as big a month as the previous month. I only made $1,300, but it was a good month. I did fewer trades. I spent a lot less time working on the trades, and as I do more and more, I'm getting to be more and more comfortable about doing these trades. So overall, it's a good month. In a way, I'm almost, if you average the 3 months, I'm pretty close to $1,500 each month. So I'm thinking I can easily make at least $1,500 a month. And once I add that to my dividend income, it's almost enough to completely live off of. So that's it. It's another good month. I didn't have anything get assigned. I didn't lose or take a loss on any of these trades. I kept things simple. I didn't take a lot of risk. I kept the deltas low, meaning I only invested in things where the probability was close to 80%, meaning a probability that when the contract expired, it would be out of the money. So that's it. Thank you for joining me on my journey. I hope you check back, each month, and each month I'll be adding more. As I learn a little bit more on my journey, I want to share it with others. I feel like a lot of people can use this to augment their incomes and can potentially retire earlier. It also lessens the amount of stress. I could be out there looking, driving Uber or doing something else that in a way isn't this much fun. So as always, if you have any questions, please leave me a message. I do have a site that's associated with it, and the links for the site will be below. It's easyinvestingincome.com. I am going to set up a Patreon page where I'm going to share with people even more details on what I'm doing. I'm going to share my journal, my actual list of stocks that I typically use, stocks and ETFs, and I'm still kind of identifying how I want to do all that. But if you're curious, check out my site, and you want to be one of the first to register. I'm keeping the prices relatively low at this point, and I may increase it as I get more interest. But the important thing for me right now is to get these videos out here, to get my blog posts out, and to help people with this journey. It's surprising, how it's almost, the fact that they don't teach this. There's limited places where you can learn how to do this. And, I did learn from some other YouTubers and some other bloggers. But until you actually start doing it and get your hands dirty and, start slow and take small steps, you really don't get a feel for it. Now that I've been doing this for several months, I'm amazed at what I've learned. So I hope you take a look, and as always, have a great day. Thank you.